Dennis Gartman's with us, editor and publisher of the Gartman Letter. All right, Dennis, we keep having this discussion about profits. Is it as good as it's ever going to get right now, or can it get better? Which side of the fence are you on?
It may well get better. I mean, companies here in the United States have done an extraordinary job of making their balance sheets better than they have been. We have learned how to use, we've become more productive. We're using machinery far better. We're using labor far more effectively. We could still see profits get stronger. The economy is indeed doing very well, and as my good friend Brian Westbury calls it, this is a plow horse economy, not a racehorse economy, and it continues to plow forward. But am I bullish of stock prices at this point? I've been on the show now for several months, and beginning basically in December and January of this year, I started to turn quite bearish of stocks. I think stocks can be under pressure, even though the economy is doing quite well. So can profits get better? Probably are, probably shall.
Okay, well, if you're a little bit worried about the stock market and its direction, where would you put your money? You wouldn't go into bonds, would you?
Well, there are actually some interesting bond funds listed on the New York Stock Exchange, ETFs of the sort, that are short-term duration that pay, I mean, many of them pay 7, 8, 9% with returns, with dividends paid on a monthly basis. So I think that's a fairly good place to go hide. Would I own long-term government bonds? No. Would I own long-term corporate bonds? No. But would I own bonds of 3, 4, 5, 6-year duration? Absolutely.
Wait a minute, Dennis. I was not aware of that. I've been looking around for a high-yield investment. I did not know that I could get a bond fund that will pay me on a monthly basis 7 or 8% dividend yield. I mean, sorry, interest. I wasn't aware of that. Tell me.
Well, they are listed. I hate to talk about them on national TV, because otherwise the SEC gives me a hard time. But to send me an email, I'd be happy to send you the names of a couple of them, the ones that I own in my own retirement account.
Are they corporate bond funds?
No, actually, one of them that I own is actually in Australian and New Zealand 3 to 4 year treasuries. They're Australian treasuries and New Zealand treasuries, but for the fact of the matter is, it's been quite some period of time since either Australia or New Zealand has had a revolution. I'm not really too concerned about it, and they pay very well. Plus a couple of other ones that have some equity involved in them, business development corporations, BDCs that pay very nice dividends. They're under some pressure, obviously, as interest rates have been going up. But when you're getting paid 8 and 9% per year and getting paid on a monthly basis, it does overcome any kind of weakness that you might see in the bond market.
It most certainly does. I was not aware of that.
It really does.
Dennis, that's very useful information for our audience. I mean, a lot of people who watch the show, a little worried about the toppiness of the stock market and would just love 7, 8, 9% monthly dividend. That's good stuff. Mr. Gartner, you're all right, and we like that information. I might even use that. Gartman, sorry, Gartman, got him. Oh, sorry. Dennis?
I've been called worse.
Not by me. Dennis, you're all right. We'll see you again soon. Thank you, sir.